Excuse me, but I've got something to tell you first. Thank you for ruining my life!
Ashley!
What did you do?
Everybody's always blaming me for everything.
The Dow climbing 250 points at the highs of the day, but the index closed much lower, ultimately ending up just over triple digits. S&P negative for the fourth straight day, the longest losing streak of the year. So has this market gone from buy the dip market to a sell the rip one, Guy?
For the last 4 days, absolutely. And I thought, listen, I know the Dow closed higher in a day, 100 and some points, but the S&P is what I watch. I think that's what we all watch. And for the last 4 days, we've had big moves to the upside, followed by markets that closed.
What is a Bitcoin?
What is Bitcoin? What backs a Bitcoin?
You put some of your money, real money, online, and it turns into Bitcoin.
I don't even know why we call them coins, except that they call it coins in the name.
I think Bitcoin has turned into a massive multiplayer online game where speculators are trying to out-speculate each other.
Is it a means of exchange or an asset class?
I see you taking my real dollars, and then you give me virtual money in return.
Thanksgiving dinner, my grandmother asked me, what the heck is this Bitcoin stuff anyway, right? And I said to her, do you remember when Visa cards first came out? You were used to paying with cash or with a check, and then a Visa came out. It was this weird payment system that you didn't understand. And she said, yeah, I remember that. I said, well, Bitcoin is just the next evolution of another payment system.
Bitcoin. By now, you've probably heard of it. The wild fluctuations in its price has gained the attention of the mainstream financial media. But Bitcoin is much more than just your average investment. Beneath all the hype and hysteria lies what could be the most important technology of our lifetimes. So what exactly is it? To fully appreciate the characteristics that make Bitcoin a potentially world-changing technology, we first need to understand what money is.
Currency started developing 6,000 to 9,000 years ago, some sort of medium of exchange, and people used something of value. Societies around the world, though, started to select gold and silver as their primary currency about 3,000 years ago, and then about 680 BC, they became money when they were minted into coins of equal weights. Governments started creating representative currencies where you deposit your gold and silver, or they have gold and silver in the treasury and they come out with notes that are basically a claim check on the gold. So they're supposed to be as good as gold because you can always convert them into gold.
In 1944, the Allied nations met at the small town of Bretton Woods, New Hampshire. Here, they drafted a new financial system, which would stabilize the world's financial system once the war ended. With the United States poised to enter a golden age of prosperity, the U.S. dollar was chosen to be the world's reserve currency.
The Bretton Woods system was created after the Second World War at the Bretton Woods Conference in New Hampshire. And rather than using gold as the means of exchange between countries, as was the case under the old gold standard, the dollar was going to be used. The dollar was chosen because back then it was as good as gold.
Under this new system, the countries of the world would tie their currencies at a fixed rate to the U.S. dollar. And because most of the world's gold was held in U.S. vaults, the U.S. dollar would be backed by gold at a fixed price of $35 per ounce. This created a system where the currencies of the world were effectively backed by gold through the U.S. dollar.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The Bretton Woods system lasted for about 25 years, but in August of 1971, President Richard Nixon called for an emergency press conference where he announced foreign countries would no longer be able to convert their U.S. dollar holdings into gold. This surprise move would come to be known as the Nixon shock. With this one announcement, President Nixon effectively created our current monetary system, a system where no currency is backed by gold or anything of value. This is what is known as a fiat currency.
Fiat currency is currency that's backed by nothing except government promises. The word fiat is a Latin word, and it basically means currency that's circulating by force. If people have confidence in that currency, and if there's enough government force, that will enable the currency to circulate for a period of time until people lose confidence in the currency.
Money is a medium of exchange, and the way it has evolved is that it's always something of intrinsic value until the modern age, when the politicians say, well, we don't need anything of intrinsic value anymore. All we need is political decree. We can say this is money, this piece of paper is money. Now money has a new characteristic. But underneath it all, there's this same concept in place that nobody ever seems to challenge, and that is that governments have a right to declare something of no value to be money, and you must accept it. That's really the problem, and it's still the problem today.
Without anything tangible backing the currencies we use today, governments around the world have been able to issue unlimited amounts of new currency without restraint. And with the advent of the digital age, currencies around the world are now digits in a global banking database. So what is Bitcoin? Well, simply put, it's a digital currency, much like the electronic currency we use today. But it's also the payment network which facilitates the transfer of this new digital currency from one person to another.
Bitcoin's a new internet protocol that enables the transmission of value over a communications channel. You can think of it like being able to send a gold coin as easily as you send an email. You can send any amount of money to anyone in the world, anytime, can't be seized, can't be confiscated, can't be frozen. Very useful technology.
So Bitcoin is a digital currency, and it is a payment system. So it's a payment system in the same way that bank networks are, or PayPal. Those are all payment systems. But it's also a currency. So PayPal and banks use the dollar as their currency. The Bitcoin payment system uses Bitcoins as its currency. So they both have the same name.
What is your opinion of disruptive digital currencies such as Bitcoin?
If you're looking for the idea that a currency doesn't really have to be something physical, it can be something that's virtual, that's the system we already have. You know, and if you want it to be, I want a way to make payments electronically, that's, credit cards. I mean, so exactly what it is that this thing is supposed to be doing that we don't already mostly do.
Bitcoin is different from other fiat currencies in a couple ways, but not the way people think. So most people think it's different because it is a digital currency, but fiat currencies are also digital, right? So the dollar is a digital currency, the euro is a digital currency. They're all just ones and zeros in the banks of the world. So it's not that Bitcoin is digital that makes it unique. It's unique in that it cannot be created out of thin air. So dollars, euros, yen, these can all be created out of thin air by people who have permission to do so, which is generally a central bank. Bitcoin has no ability to create it out of thin air. So it is a scarce digital asset.
Unlike the banking system we currently use, where bureaucrats meet behind closed doors and determine and regulate the supply of new currency, mathematics and cryptography are used to regulate the creation of new bitcoins. The Bitcoin network is decentralized, meaning that instead of transactions and account balances being stored on a central computer or database, Bitcoin's ledger of accounts, more commonly known as the blockchain, is distributed across tens of thousands of computers around the world.
There's something called Napster. We all remember Napster. We could download music and movies from Napster, but after a while it got so big and popular, the government came in, shut it down because of copyright infringements. No more Napster, right? So then somebody created something called the BitTorrent network. What's this? This is a software people run on their computers that allows people to file share. So if you run this software, you can go to things like Pirate Bay or Views or BT Junkie, and you can download any music or any movies you want, and they can't stop it because it's not a centralized location. Well, Bitcoin is the currency that runs on the BitTorrent network.
Why was gold and silver considered money for the last 4,000 years is because it took work and effort to make that nice, beautiful coin. They had to dig it out of the ground and refine it in the crucibles and the furnaces and stamp it into a nice, beautiful coin. And that took work. So you didn't have to trust anybody that they were going to work for you. The work was already done. Well, Bitcoin, proof of work, is the same thing, right? You have to hash away and solve all these math problems. You have to have the chips and the electricity and yada, yada, yada to create a Bitcoin. It costs today about $800 to make a Bitcoin.
I believe that Bitcoin has multiple levels of intrinsic value. The properties like being unconfiscatable, properties like this censorship-resistant value transfer that no one can stop you from sending. More importantly, what gives it intrinsic value is the productive capacity and the brain power of some of the brightest developers in the world that have chosen to work on this open source protocol. And this productive capacity of some of the brightest minds that are building it is what truly gives it value.
All Bitcoin transactions are cryptographically verified by thousands of computers on the Bitcoin network. These very powerful computers, known as miners, expend a massive amount of energy and processing power to verify the integrity of each and every transaction.
So the miners basically validate transactions. All these transactions are flying around, and they have not yet been formally vetted by the network. If the miner believes the transactions are valid, it will put them in the block, and the block then becomes part of the blockchain. And over time, that becomes the record of truth. And so what that means is that if you receive Bitcoin and a few blocks happen after you receive it, no one can ever take that money away from you because the blocks have been stuck into the blockchain, they can't be reversed, and you know that the money is truly yours.
The decentralized nature of the Bitcoin network eliminates a single point of failure and makes it impossible to be hacked or to be shut down. Bitcoin transactions are transmitted peer-to-peer without the need for a third party, meaning that the user is in complete control of their money.
It's impossible to be shut down. That's the beautiful thing about it. There is no Bitcoin place. You can't shoot Bitcoin.
It has no center of gravity. It has no headquarters. You can't shut it down.
The only way you could is to shut off the internet. Your average person has absolutely no idea how their email works, but it works, and that's all that really matters. And Bitcoin's very similar to that. But as far as what I would do to tell people or describe to people who don't know about Bitcoin what it is, I would say it's a form of money that you can just use on your phone or your computer in today's digital age where everyone's on the internet. That is much faster to send than most of the banks. And it has, for at least since its inception in 2009, risen in value.
For new users, the inner workings of Bitcoin can be quite complex and daunting. But what's important is how this revolutionary technology changes how money is transferred globally.
Right now, every single payment that you make to another person goes through an intermediary. Either PayPal or bank or Visa or MasterCard. And more importantly, the governmental jurisdiction decides if you're allowed to make that payment. That payment could be stopped halfway through, and then you have to try and get your money back. With Bitcoin, no one can stop it. The moment you decide to send another person digital value, you can just send it. And there's nobody in your way. There's no one that has to give you permission to pay another person money, and all they need is an internet connection.
This has the potential to displace the need for banks as a trust institution. If you and I exchange currency or have commerce using Bitcoin and it goes on the ledger, on the blockchain, we don't need a bank to confirm that that is a valid transaction.
One of the differences between Bitcoin and the banking system is it doesn't require a third party to perform. When you make a deposit into a checking account or a savings account, you are actually loaning the bank your currency. They now have title to it, and they have a liability on their books to pay you back one day, but they get to do anything they want with it. And you have this intermediary, this third party, counterparty that has to perform for you to be able to get your currency back. Cryptocurrencies invert the power structure. It isn't a few people at the top controlling a whole bunch of people at the bottom. The power goes to the individual.
In the same way that the internet flattened access to information and allowed anyone in the world with an internet connection to learn basically anything they wanted to know and to communicate with anyone else on Earth, Bitcoin does that with money. So now anyone on the planet, no matter their age or the arbitrary geographic location in which they were born, or the arbitrary rules of the people that govern over them, that person can now engage economically with anyone else in the world directly. And that's profoundly powerful. You do not need a bank account to interact with Bitcoin. You do not need a bank account now to receive an honest payment from someone else in the world and know that the money is legitimate and good and can't be rescinded. So money now can't be censored. Any two people can send it between each other through Bitcoin.
Cryptocurrency Bitcoin has once again defied naysayers by spiking above $18,000 at one point today.
Bitcoin hits a new high. We had this incredible run up in the fall going into the holidays, and then we've seen a pretty big pullback.
This is a 30% loss in the week and a 50% loss in the year.
The past year has seen the price of Bitcoin rise and fall in dramatic fashion, getting the attention of Wall Street and the investment community. Bitcoin is now seen by the public as a speculative asset class that can be traded, but the core fundamentals of this important technology cannot be overlooked. The use of Bitcoin is particularly vital in the developing world, where billions of people are without basic banking services.
People who see the price all the time, especially in advanced societies, they focus more on the price, and they think that Bitcoin is an investment solely, and that it goes up and down like a stock based on news and expectations. But the fact is, probably there's more people in these kind of third economies. They don't own a lot, but they own it, and they own it because they need it. Not because they expect to get rich or hope to get rich, because they need to protect themselves against both destroyed fiat currencies and against capital controls. So when people think of it as an investment, they have to realize that the reason that Bitcoin's so exciting is because it's a future money for the world, not because it's something that could become a great investment. It just so happens to be that both can be accomplished at the same time.
One of the great powers of whether it's Bitcoin or any other cryptocurrencies, if we can figure out how to scale the technology, we can solve a lot of problems in the financial system. We can transact with each other globally at very low cost and very efficiently. And there's tremendous market power in that. Has nothing to do with anyone in the financial system. People want to be able to communicate and transact with each other simply and quickly, and the hunger to do that is enormous.
Today, Bitcoin is seen as a financial asset, but as the technology develops, the blockchain that powers Bitcoin may be used to verify transactions other than the transfer of money. Each Bitcoin is divisible into 100 millionth of a Bitcoin, called a Satoshi. These tiny fractions of a Bitcoin can be programmed to represent assets other than money. In this way, the Bitcoin blockchain can be used to verify transactions of all kinds of items without the need for a central authority.
The Bitcoin blockchain is a tremendous technological innovation that enables distributed consensus. People are able to come to agreement on what the state of this ledger should be and what it is. And that enables people to have trust without trusting any other party or person or institution. So anywhere we need to have trust, where we need to be able to verify what is the true and correct state of something, that has an application to be put on the Bitcoin blockchain.
For 6,000 years of recorded history, we've always had this problem when we want to engage in consensual exchange. That is, if we're strangers, can I trust you? And what's happening with Bitcoin and the blockchain, the technology that powers Bitcoin, is it is now possible for us to have trustworthy exchange without those third parties. The trust is built in through the cryptography. That guarantees the exchange of value. Well, that means that there's this technology that is as disruptive as the internet was to publishing. But this is disruptive to these 100 different institutions that really are the glue that pulls society together. You know, everything from as mundane as notary publics to the land titling, to coining money, to voting. All kinds of these things are going to be recreated in the blockchain in a way that we will finally be able to fully trust. But what that means is what we've seen technology do to lots of private industries is now going to start doing to government function.
The thing for me is
understanding the implications of what this is. You can take 100 million bits of a Bitcoin. Each bit is called a Satoshi, right? And you can program that to be anything of value. It can represent titles to automobiles or real estate or diamonds or gold or votes in elections. Anything of value can now be digitized and tokenized, put up on the blockchain, and transacted, can be sent across the internet without having to go through a trusted third party.
I think the blockchain and Bitcoin is going to change the world. I think it's going to change everything in terms of protecting people's identities, allowing people to own property. Bitcoin's for the 2 billion people that don't have bank accounts, the 5 billion people that can't prove they exist. They don't have title to real estate and stuff. That's what Bitcoin's going to change the most for those people, is because, you know, they're going to jump from the third world to the first world. It's really going to revolutionize Latin America, Africa, Southeast Asia, where people can finally now own real estate. We can have a transparent election that can't be hacked. Imagine. That's going to change the world in and of itself.
Tempers are beginning to flare. These people have already been in queue for more than 3 hours now. Carrying currency notes, the government suddenly banned on Tuesday night.
Because anyone can start using Bitcoin by simply installing an app on their phone, Bitcoin can be used by the developing world to protect their wealth from unstable currencies and government control.
We're seeing it behave as a crisis currency in Venezuela, in Nigeria, in Zimbabwe. When these countries can't get a grasp on their own monetary policy, people flood to Bitcoin.
The fate of the unbanked and underbanked population no longer lies in the hands of corrupt governments, centrally planned economies, and central banks. There's a new option, a plan B.
Personally, I live in the United States, and a lot of people in the U.S. get bank accounts very easily, have credit cards, debit cards, and all of that, and they don't find that there are too many frictions and pain points. But in a country like India, there are 233 million individuals who are unbanked, who don't have access to a traditional financial infrastructure, and so they're operating cash payment to cash payment. But Bitcoin has become a game changer. So individuals, in essence, can hold on to it, they can spend it, they can transfer it internationally. There are so many use cases.
Currently, Bitcoin transactions can sometimes carry a significant fee, making it unsuitable for use for small transactions. But Bitcoin is programmable money, meaning that new layers and technologies can be integrated into it. In the near future, one such development, called the Lightning Network, will help reduce the cost of Bitcoin transactions.
At the moment, Bitcoin is actually suffering from being too popular. One of the challenges that Bitcoin has is every transaction needs computational power to process. So at the moment, Bitcoin can settle about 4 to 7 transactions a second. And in the future, each of those 4 to 7 transactions a second can contain 1 million transactions within it. And that's what the second layer and Lightning is trying to do. It will just make it so much more efficient and so much cheaper for the average person.
The integration of the Lightning Network into the Bitcoin protocol will scale Bitcoin into a fast, cheap, and efficient payment system. Once implemented, this will have enormous implications for the developing world.
One of the stumbling blocks to doing international business is the payment system. And to be honest, if you're taking credit cards from some countries, those countries are so associated with fraud that your rates on all credit cards you take just become astronomical, and it becomes prohibitive.
Something like 33% of the credit card transactions coming out of Africa are fraudulent. So nobody wants to take business from Africa. It's just too risky. With Bitcoin, you know the funds are good. So as a merchant, yeah, pay with Bitcoin. I'll sell anything you want, that's legal to Africa. That has tremendous implications, to be able to get access to these types of products and services so seamlessly. And then they're able to start having property rights. And property rights is really what's going to help lift them up out of poverty.
Closer to home, in today's digital world, governments have started to phase out cash, replacing it with digital currency. In this environment where concerns over personal privacy are very real, Bitcoin provides monetary sovereignty outside the control of government policy.
When you have a situation where the government is trying to control, they don't want people to have the means of hiding anything from them. Not just from a tax standpoint, they want to know what everyone's doing in Big Brother fashion. So, the way that I look at Bitcoin is it's the ultimate monetary weapon that the people have never had in history.
Every government in the world wants to go cashless. One of the reasons is that in a cashless society, you are not able to exit the banking system. When people panic, they run to the ATM machines, they run to the bank and they withdraw money. The other thing is the governments are starting to run out of money, and governments don't build anything. They just use other people's money. So they are treating everyone as a tax evader. I believe the main reason why Bitcoin is so popular and important is not because of its finite supply and being gold. It's because of anti-money laundering laws preventing people from doing what they want with their money.
One of the main functions of government is to create currency. And Bitcoin is successful only because of its potential for circumvention, lack of oversight. So it seems to me it ought to be outlawed. It doesn't serve any socially useful function.
As to whether or not Bitcoin is illegal or should be seen to be illegal, cash has been used for a whole heck of a lot more illegal things than Bitcoin has through the years, and still is today. Cash is untraceable. It's easily transportable. Nobody knows where that dollar has been and how it's been moved from hand to hand to hand. So it's just a matter of making that connection that a cryptocurrency is really not a new thing. It's just a different version and a digital form of something that's existed in our society and legal structures for millennia.
Bitcoin is shifting the paradigm and challenging the legacy financial system. Recently, Jamie Dimon, chairman and CEO of JP Morgan Chase, America's largest bank, was quoted calling Bitcoin a fraud.
Why is Bitcoin a fraud? Here's the reason. Governments, the first thing they do is form a currency. They like to control the currency. They control it through a central bank. They also like to know who has it, where it is, where it's going. Wait until someone gets hurt. Wait until it's used for illicit purposes, which it is somewhat used for illicit purposes. They close it down.
You got people like Jamie Dimon, a serious guy, calling it a fraud.
Calling it fraud? You mean like those hundreds of billions of dollars of securities that Jamie Dimon sold the public a decade ago called mortgage-backed securities? He's calling Bitcoin a fraud? Is that going to go to zero like his securities that he sold the public?
First with respect to asking a banker about whether they like Bitcoin or not, that's kind of like asking a king, do you like democracy? It's just so thoroughly frustrating and insulting when people who know very little about what we do watch an up-and-coming technology and have the audacity to call us all criminals. We're not the criminals here. The whole damn reason this ecosystem exists is because they're the criminals. And it doesn't really matter at this point what he thinks. The genie's out of the bottle. Somebody in this room or somebody at this conference or somebody around the world is going to solve the problem of decentralized lending and value-stable currencies and decentralized exchange. And within 5 to 10 years, banks will become less and less relevant, just like landline telephones are becoming less and less relevant. And we're going to wake up one day and we're going to be in charge of our own money. And Jamie Dimon, in retirement, can watch the world as it is, not the world as he would like it to be.
The Bitcoin blockchain is built on decentralized consensus outside the control of a central party. However, with the hype in the rise of cryptocurrencies such as Bitcoin, both central banks and commercial banks have started to develop their own digital currencies under the guise of what they call blockchain technology.
My big fear is that what is going to happen is blockchain technology will be adopted by governments, and fiat national currencies will be run on blockchain technologies, and the whole monetary system globally will eventually become cashless. And at that point, if it's centralized and there's an entity that runs the blockchain, they can lock you out of it if they don't like what you're doing, and they can trace everything that you do. Every transaction, everywhere you go, will be recorded. And so, you know, if we're not careful, this has the ability to enslave us or free us.
I think blockchain or any kind of open ledger distributive database will have a tremendous impact on our world. My fear is that, and this is used to centralize, digital technology gives a banker the ability to put a chip in you, to tax you whenever they want, to interface with a money system with you physically, and to perfect the collateral. So I love the innovation, and the question for all of us is, how can we innovate and make the financial system more efficient and do it in a way at the same time where we distribute the power lines in the political system?
The blockchain is a technology, which is a good technology. We actually use it. It will be used for a lot of different things. God bless the blockchain. Cryptocurrencies and digital currencies, you know, I think are also fine. You know, JP Morgan moves $6 trillion around the world every day. We don't do it in cash. It's done digitally. Yeah. If it can be done digitally with the blockchain, so be it. But it'll still be a dollar cryptocurrency.
A majority of the people are using the word blockchain, and they don't really care whether it has this decentralized mining. The government is going to just have a digital representation of the dollar. They can call it a blockchain, but there's not going to be mining. There's not going to be decentralization. It's going to be a centralized coin. Whether they call it a blockchain or not is irrelevant.
The whole purpose of a blockchain is to remove control from a central party. If you're a central bank and you make a blockchain for dollars, and then you have dollar coin, if you still have full control over the dollar coin, you can create how much of it you want, you can control where it goes. There was no point in having a blockchain at all. You might as well just have a centralized database like a banking system. To really use blockchains in any meaningful way, it means that there is no person in charge. And so a central bank, by definition, is the one who is supposed to be in charge of money. And thus they would never create a blockchain or a cryptocurrency that they couldn't control. So that's why they will likely be made redundant, because the market can choose what kind of money it uses. And it now has a choice between a digital currency that can be controlled by central parties and inflated without limit, or a digital currency that cannot be controlled by any central party and that has a fixed amount and can't be debased. Over time, that's going to be a very obvious choice.
Bitcoin and the blockchain behind it are incredibly powerful technologies. As the future unfolds, these technologies could be used to restructure the financial system into one of fairness and equality for all, a system outside the control of the banking elite.
We have millions of people now taking an interest in what is money, the question of what is money, what should it be?
Yeah, Beijing is in fact looking to introduce a new way to price oil as early as this year in their own currency. Up till now, the U.S. dollar has been the only currency with which large-scale purchases of oil were conducted, hence the term petrodollar. But now it's the idea of the petro-yuan that's being introduced, which would, of course, mark a significant dent in the U.S. dollar's global dominance. Now, the move will allow China's trading partners to pay with either gold or to convert the yuan into gold, cutting out the U.S. dollar out of the question altogether. And frankly, it's a logical move for China because they're, of course, the world's largest oil importer. For example, just last year, China spent over $100 billion U.S. dollars on oil. So in theory, if they manage to make those purchases in yuan in the future, that would mean a huge chunk of U.S. change completely off the financial markets. And one can only wonder what sort of effect that will have. And of course, it's a rather ambitious undertaking, and there is some doubts that trading partners will get on board to make that possible. And of course, it goes without saying that after 4 decades of the U.S. dollar priced oil, it's not a change that will happen overnight.
OK, well, to discuss this a bit further now, we're joined by the host of RT's Kaiser Report, Max Kaiser. Max, good evening. Thanks for coming on. We were hearing there that China looks set then to challenge the petrodollar. Why does Beijing feel the need to do this?
Well, first of all, they're very brave to do this because countries that have tried to exit the
oil-dollar matrix have met terrible ends. Of course, Saddam Hussein wanted to trade oil in euros. He was killed. You had Muammar Gaddafi wanted to trade his energy in something other than U.S. dollars. He was killed. So the track record here is pretty dire. So kudos to China for taking this project on. And, of course, they are rumored to be the big buyer in the Aramco offering of their state oil facilities coming down the pike. So this makes sense in a geopolitical sense in terms of you've got China and Russia and the Saudis are looking to escape the U.S. dollar hegemony. They're looking to de-dollarize. That's a concept we see all over the world right now as countries want to escape from the U.S. military-industrial complex. These countries around the world are tired of funding America's military adventurism by being a party to the empire of debt, as it's known around the world, the U.S. dollar, and they want to split off. They want their autonomy. China wants autonomy. Russia wants autonomy. Iran wants autonomy. They don't want to be ruled over by the U.S. dollar anymore. So this gives them away this contract, futures contract based in yuan for oil, convertible into gold. It means that these countries can finally, and it's been in place since the end of World War II, escape the Bretton Woods U.S. dollar hegemony, empire of debt, supremacy, world reserve currency that is the U.S. dollar, and we're in a new beginning, I think.
Is there anything then that the U.S. can do about this? Because it's not going to be happy that it's going to lose the petrodollar. So how would you expect it to fight back?
Well, they're exactly right. They will fight back. They will start a war. Maybe they'll start a war between Japan and China. Maybe they'll start a war with North Korea. America will do anything to keep the U.S. dollar as world reserve currency. They will invade a country like Afghanistan. They'll stop at nothing because this is the basis of the U.S. empire. It's not land-based. It's not based on material goods. It's based on rent-seeking. It's based on lending dollars, getting that income, and then when countries can't pay, they dismantle the assets and take them over. We saw in Latin America, South America. This is how America built its empire. The countries that are resistant to America's financial cartel are Russia, China, Iran. So now they figured out, you know what, we're going to split off from the dollar, and they can do so with this new contract. And they're embracing cryptocurrencies. Cryptocurrencies in this context is another way to de-dollarize, get out of the U.S. dollar. The U.S. dollar is being held up narrowly with the Pentagon's various actions around the world and a lot of market machinations from the central banks. But once the cat's out of the bag, look for the dollar to have a very significant crash.
And among the countries you said might actually join China in this were Saudi Arabia. You said that just a couple of minutes ago. I mean, that might surprise a lot of people that they would be willing to go ahead with this.
Oh, yeah. So absolutely.
So how could they be able to do this and simply switch out of the US dollar? Do you think it's that simple for them?
Well, it's not going to be simple, but there's definitely a motivation for the Saudis to, they want to float Aramco, for example, because they need the money, because they're deeply in debt, and they're running out of cash, and they wanted to do an IPO of Aramco on either the London or the American exchange, but they were prevented from doing so from the legal actions of the 9/11 survivors, who rightly point to the Saudis as the cause of 9/11, the architects of 9/11, and they were allowed in America for those lawsuits to go forward. That's a pretty recent development. Only in the last year or so, lawsuits against Saudis for terrorism for 9/11 have been allowed to go forward. So now the Saudis are like, okay, if that's the way you feel, America, then we're going to take our business to China, Russia, Iran, So there's a huge split between the Saudi and America right now. The petrodollar, which got started in 1970, 1971, that's coming to an end.
One of the things I've always admired about you as an investor is that you don't talk about what should be. You figure out what is going to be, and then you do that. So what is going to be with respect to the stock market? What's going to happen?
I learned very early in my investing careers, I better not invest in what I want. I better invest in what's happening in the world. Otherwise, I'll be broke, dead broke. Well, what's going to happen is this is going to continue. Some stocks in America are turning into a bubble. The bubble's going to come, then it's going to collapse. And you should be very worried.
Well, yeah, TV ratings do seem to go up during crashes, but then they completely disappear when everyone is obliterated. So nobody is hoping for that. But so when is this going to happen?
Later this year or next.
Later this year or next.
Yeah. Write it down.
And what will trigger it?
Well, it's interesting because these things always start where we're not looking. In 2007, Iceland went broke. And people said, Iceland, is that a country? They have a market? And then Ireland went broke, and then Bear Stearns went broke, and then, you know, Lehman Brothers went broke. They spiral like that. Always happens where we're not looking. I don't know, it could be an American pension plan that goes broke, and many of them are broke, as you know. It could be some country we're not watching. It could be all sorts of things. It could be war, unlikely to be war, but it's going to be something. When you're watching Business Insider and you see, that's so interesting, I didn't know that company could go broke. It goes broke. Send me an email, okay, and then I'll start watching.
And how big a crash could we be looking at?
It's going to be the worst in your lifetime.
I've had some pretty big ones in my lifetime. It's long.
It's going to be the biggest in my lifetime, and I'm older than you. No, it's going to be serious stuff. It's going to be big. We've had financial problems in America, let's use America, every 4 to 7 years since the beginning of the Republic. Well, it's been over 8 since the last one. This is the longest, or the second longest in recorded history, so it's coming. And the next time it comes, you know, in 2008 we had a problem because of debt. Henry, the debt. Now, that debt was nothing compared to what's happening now. In 2008, the Chinese had a lot of money saved for a rainy day. It started raining, they started spending the money. Now even the Chinese have debt, and the debt is so much higher. The Federal Reserve, the central bank in America, the balance sheet is up over 5 times since 2008. It's going to be the worst in my lifetime too. Be worried.
I am worried.
Good, good.
Can the Fed rescue us? Can anybody rescue us?
They will try. They will. What's going to happen is they're going to raise interest rates some more. Then when things start going really bad, people are going to call and say, you must save me. This Western civilization is going to collapse. And the Fed, who's made up of bureaucrats and politicians, will say, well, we better do something. And so they will try, but it won't work. It'll cause some rallies, but it won't work this time.
And we are in a situation where Western civilization already seems to be possibly collapsing, even with the market going up all the time. Often when you do have a financial calamity, you get huge turmoil in the political system. What happens politically if that happens?
Well, that's why I moved to Asia. My children speak Mandarin because of what's coming. You're going to see governments fail. You're going to see countries fail this time around. Iceland failed last time. Other countries fail. You're going to see more of that. You're going to see parties disappear. You're going to see institutions that have been around for a long time. Lehman Brothers has been around over 150 years. Gone. Not even a memory for most people. Well, you're going to see a lot more of that next time around, whether it's museums or hospitals or universities or financial firms.
Excuse me, but I've got something to tell you first. Thank you for ruining my life.
Ashley!
What did you do?
Everybody's always blaming me for everything.
The Dow climbing 250 points at the highs of the day, but the index closed much lower, ultimately ending up just over triple digits. S&P negative for the 4th straight day, the longest losing streak of the year. So has this market gone from buy the dip market to a sell the rip one, Guy?
For the last 4 days, absolutely. And I thought, listen, I know the Dow closed higher in the day, 100 and some points, but the S&P is what I watch. I think that's what we all watch. And for the last 4 days, we've had big moves to the upside, followed by markets that closed effectively on the lows of the day, and they've seen it now for 4 days. I think that's a bit of a trend. So I would say yes. The only caveat is the VIX, quite frankly, and Pete can speak to this, should have been higher today, and banks traded well. So got some cross currents. But in terms of the broader market, I do think you're in the short term, at least, in a sell the rip mode.
You know, the VIX could have been higher, but the reality is, look where the S&P actually traded today. I mean, we needed a 1% move for a 16 VIX. We're a little bit above that level right now. So actually the VIX is showing you there is a little bit of a fear factor in there because it's a little higher than it probably should be given the moves we're getting out of the S&P 500. I think what we're really seeing in these markets right now is sell the rips. That makes a lot of sense to me because when there are valuations all across the area of the markets that it just seems a little inflated, so you want to take a little something off. I agree with that. So I'm more on the sell the rips than I am on buying the dips right now. But I think the reality is we're still in this rotation of almost daily. And today, materials, energy, they were out, but all of a sudden you look back, you look at McDonald's, you look at UNH, some of these names that were skyrocketing to the upside. Not just the Boeings of the world anymore. There are other names that are actually leading at least the Dow.
Look, for any part of your portfolio that's tactical, there's no reason why you're supposed to be buying these dips. Think about all the uncertainty out there. And I don't, it's not Fed, it's not interest rates, it's not Washington, it's not trade wars, it's not valuations, it's all of them after a massive move in stocks. So when I look at what the dollar did intraday, that's enough to hurt stocks. So that actually the Dixie around 11 o'clock, around the time these numbers came through, went from having a difficult time getting through the 50-day to now maybe, look, if we've got a dollar rally here, that's obviously very supportive to some companies, but I think that's a tailwind. I think it's a tailwind for markets, especially markets that at least in the last week or two have shifted towards at least some concern about growth. So no, I don't think you need to do anything aggressive here. I've been frustrated as a trader by some of these things that have failed to break out above the 50. Emerging markets, for example, every time it looks like intraday we're getting a breakout, that tactical part that I'm trading is pulling back.
This is a change in mentality, though, for most investors out there, not to buy the dip.
It's time to be alert. This is the time to be alert for any signs of a failure in the S&P 500. Why? There are two really good historical precedents to the current market configuration. The setup is as follows. Stocks suffer a rather quick correction, bounce back, take out the previous lows, and experience a waterfall decline. The period of time from the bounce back high to a new low was 7 days. Let's look at the 1929 crash to start. The S&P 500 peaked at 31.86 on September 16th, 1929. Over the next 14 days, the index experienced a 10.08% correction. Then, over the next 4 days, stocks bounced back by 7.54%. What followed was a 7-day period of time where stocks drifted lower, and then on October the 18th, 1929, the low was broken and a waterfall decline ensued. The decline from October 8, 1929 to November 13th, 1929 was a 22-day waterfall decline, with stocks dropping 42.68% in November 13th, 1929. The 1987 crash was a remarkably similar experience. Stocks peaked on August 25th, 1987, and then began a 7.79% decline over 18 days. Stocks then rebounded by 5.65% over the following 10 days, peaking on October the 5th, 1987. Over the next 7 days, the low failed and a waterfall decline followed. The decline was 28.51% over 4 days, culminating in a low on October the 19th, 1987. In the last 40 days, we've seen the S&P 500 peak at 2872.87 on January the 26th. Stocks experienced a 10.16% correction over 9 days, and then they bounced back by 7.96% over the next 20 days, ending last Friday, March the 9th. We are now in that 7-day window where stocks need to hold up. If over the next 7 days we drift lower and take out the 2581 low of February the 8th, history suggests this is a setup for a waterfall decline. S&P suffers longest losing streak of the year as Mueller trumps Navarro. This is not the normal pre-OPEC panic ramp. Everyone's buying stocks market. Some generous national team action overnight saved Chinese stocks from sinking back into the red, YTD. Europe closed green, rallying after US markets opened. Stocks rallied after Peter Navarro appeared on CNBC with Rick Santelli and did not say something earth-shattering. It seems we have a low barrier for what is good news again. But then Mueller headlines spark some de-risking. Dow dramatically outperform. This is the S&P longest losing streak of the year, since 12th of the 6th, 2017. Futures showed the overnight dip around the Japanese Open, suggested driven by comments from Kuroda, built it was quickly stabilized. S&P clings to its 50 DMA. Stocks also stumbled when WMT was whacked with a whistleblower lawsuit, but once again Boeing was in charge. FANG stocks were marginally lower on the day, but as Bloomberg details, the rally in the FANG block of tech shares and its megacap brethren just surpassed a dubious milestone. An index of 10 tech growth shares pushed its advance to 23% so far this year, giving the group an annualized return since early 2016 of 62%. That frenzied pace tops the Nasdaq Composite Index 66% return in the final 2 years of the dot-com bubble. The NYSE FANG index has risen 76% in the past year, picking up pace from 41% in the previous 12 months. Bank stocks stabilized a little today after what's been an ugly week. Also of note, for the 5th day in a row, VIX is holding at its 50 DMA ahead of tomorrow's OPEX. Treasury yields were broadly unchanged today, with the very short end up 1 to 2 BPS. Once again, the yield curve flattened to fresh lows since October 2007. The dollar index screamed back into the green for the week and unchanged from pre-payrolls. This is the biggest jump in the dollar since February. PMs and copper drifted lower on the day as the dollar ripped but crude bounced higher. Kudlow had a great day after saying sell gold, buy King Dollar. Another ugly day though for cryptos, as weakness accelerated dramatically overnight from the losses after Google announced its crypto ad ban, but dip buyers scooped up some in the US session. Finally, we note that the only asset class to see its volatility fully normalized since February's fiasco is gold. Stock slide, break-evens tumble after White House confirms $100 billion China deficit target. For the 3rd time in a row, stocks have burst higher out of the gate, only to be met with a wave of selling, which has promptly pushed the S&P to session lows. While there has been no specific news catalyzing the move, traders are attributing the move to a sudden drop in 10-year break-evens, with 10-year real rates unchanged, as long-term inflation pressures are suddenly looking far less pressing, which in turn has pushed break-evens back levels not seen in 1 month as real 10-year yields remain range-bound. One potential factor spooking risk may be a Reuters headline, which confirms that the White House is seeking a $100 billion reduction in the trade deficit with China. This confirms reports from last week that the Trump administration is planning to cut the annual US trade deficit with China by $100 billion. For context, the US-China trade deficit reached a record $375 billion last year, which means the White House is targeting roughly 26.7% of trade. Meanwhile, after the tariffs on US steel and aluminium imports as per Section 232, the technology sector is considered the next target, as the US wants to tackle China's use of intellectual property. Reports suggested such tariffs could come as early as this week, with sources noting that anywhere between $30 billion and $60 billion in tariffs may be targeted. It appears that after generally ignoring trade war news, markets are becoming increasingly sensitive to any trade developments in the aftermath of Tillerson's departure. US national debt hits $21 trillion. For 8 years, we took every opportunity to point out that under Barack Obama's administration, US debt was rising at an alarmingly rapid rate, having nearly doubled, surging by $9.3 trillion during Obama's 8 years. It now appears that the trajectory of the US debt under the Trump administration will be no different. And in fact, based on Trump's ambitious fiscal spending visions, may rise even faster than it did under Obama. We know this because as of close of Friday, the US Treasury reported that the total US debt has risen above $21 trillion for the first time. Putting this in context, total US debt has now risen by over $1 trillion inside Trump's first year, and the real spending hasn't even begun yet. What is amusing is that Trump, who has a tweet for every single occasion, and who no longer even pretends to care about the unsustainability of US spending, was extremely proud as recently as a year ago by how little the debt has increased during his term. We doubt today's milestone will be celebrated on Trump's Twitter account. And while some can argue, especially adherents of the socialist magic money tree, or MMT theory, that there is no reason why the exponential debt increase can't continue indefinitely, one can counter with the following chart from Goldman, which shows that if one assumes blended interest rate of roughly 3.5% as the Fed does, and keeps Americans' debt-GDP ratio constant, in a few years the US will be in what Goldman dubbed uncharted territory, and warned that the continued growth of public debt raises eventual sustainability questions if left unchecked. The bad news, however, is that debt GDP will not be constant, as the CBO recently forecast in what was actually an overly optimistic prediction. Is the US economy really growing? No. Most people are aware that GDP growth has been lower than expected in the aftermath of the global financial crisis of 2008, GFC. For example, real GDP growth for the past decade has been closer to 1.5% than the 3% experienced in the 50 years prior to 2008. As a result of the combination of slow economic growth and deficit spending, most people are also aware that the debt-GDP ratio has been rising. However, what most people don't know is that over the past 10 years, the dollar amount of the cumulative government deficit spending exceeded the dollar amount of the GDP growth. Put in another way, in the absence of deficit spending, GDP growth would have been less than zero for the past decade. Could that be true? Let's begin with a shocking chart that confirms the statements above and begins to answer the question. The black line shows the difference between quarterly GDP growth and the quarterly increase in Treasury debt outstanding, TDO. When the black line is above zero, the red dotted line, the dollar amount is GDP is growing faster than the increase in TDO. From 1971 to 2008, the amount of GDP typically grew at a faster rate than the increase in TDO, which is why the black line is generally above the red dotted line. During the 1971 to 2008 period, inflation, budget deficits, and trade deficits varied widely, meaning that the relationship between GDP growth and TDO was stable even in the face of changes in the economic variables. Regardless of those changing economic variables, the US economy tended to grow at a pace faster than TDO for 4 decades. The only interruptions to the pattern occurred during recession of the early 1980s, early 1990s, and early 2000s, when GDP fell while budget deficits did not. The pattern of GDP growth exceeded TDO changed after 2008, which is why the black line is consistently below the red dotted line after 2008. A change in a previously stable relationship is known as a regime change. Focusing first at 2008 to 2012. the increase in TDO far exceeded GDP growth due to an unprecedented amount of deficit spending compared to historical norms. Focusing next on 2013 to 2017, the blue line has been closer to the red dotted line, meaning that the dollar amount of GDP growth was roughly equal to TDO. If the pattern of the past was, in effect, the black line should have been far above the red dotted line for most of the entire period of 2009 to 2017, because it would be expected that a recovering economy would have produced an excess GDP growth over TDO, but that didn't happen. This article will not speculate on why there was a regime change. Instead, this article is focused strictly on identifying that a regime change occurred, and that few people recognize the importance of the regime change, which is probably why it persists. Taking a quick detour into the sample math of GDP accounting, the level of GDP is calculated by adding up all forms of spending. GDP equals C plus I plus G plus X. In the above equation, C is consumer spending, I is investment spending by corporations, G is government spending, and X is net exports, because the US has become such a heavy net importer. X has been a subtraction from GDP since 2000. For context, at the end of 2017, the level of GDP was 19.74 trillion per the Bureau of Economic Analysis, the BEA. Of that 19.74 trillion, the Congressional Budget Office, CBO, calculated that the US government spent $3.98 trillion, all of which counts towards GDP. In 2017, the government borrowed $516 billion, meaning that the government spent more than it received via taxes and other sources. The main insight in understanding how the government calculates GDP is that all government spending counts as a positive for GDP, regardless of whether that spending is financed by tax collections or issuing debt. Because deficit spending is additive in that calculation of GDP, it makes sense to compare the amount of deficit spending to the amount of GDP growth produced each year. The first four columns in the table below show the annual GDP, the annual dollar change of GDP, the total amount of treasury debt outstanding, TDO, and the annual dollar change of TDO. Comparing the second and fourth columns, it is easy to see that the annual increases in TDO regularly exceeded the increases in GDP. The final column to the right shows the increase in TDO as a percentage of the annual change in GDP growth. When the ratio is greater than 100%, the increase in TDO is responsible for more than 100% of annual GDP growth. Reinforcing the message of Chart 1, the annual increase in TDO exceeded annual GDP growth in each of the years from 2008 to 2016. The only year in which annual GDP growth was greater than the increase in TDO was in 2017, possibly due to the debt ceiling caps, which have now been lifted. The cumulative figures are even more disturbing. From 2008 to 2017, GDP grew by $5.051 trillion, from $14.55 trillion to $19.74 trillion. During that same period, the increase in TDO totaled $11.26 trillion. In other words, for each dollar of the deficit spending, the economy grew by less than 50 cents. Or put another way, had the federal government not borrowed and spent the $11.263 trillion, GDP today would be significantly smaller than it is. It is possible to transform Chart 1, which shows annual changes in TDO and GDP from 1970 to 2017, into Chart 3 below, which shows the cumulative difference between the growth of TDO and GDP over the entire period from 1970 to 2017. The graph below clearly shows the abrupt regime change that occurred in the aftermath of the GFC, a period in which growth in GDP growth exceeded increases in TDO has been replaced by a period in which increases in TDO exceeded GDP growth. Unfortunately, Extending the analysis forward tells us the problem will only get worse. Over the entire period from 2008 to 2021, the increase in TDO will exceed GDP growth by $7.531 trillion. $15.843 trillion of TDO compared to $8.312 trillion of GDP growth. While most people will accept that deficit spending is required for short periods to offset economic disturbances, even John Maynard Keynes wouldn't expect it to become the norm. Nor would he expect that $1 of deficit spending would produce less than $1 of GDP growth. Investments and policy implications. The purpose of this article is to clarify the changing relationship between the dollar amounts of GDP growth and budget deficits, which are funded by TDO. If needed, the GDP growth has become reliant on budget deficits post-2008. There are many implications for investment policies across all asset classes. For example, mind poor organic growth in the private sector explain the unexpectedly low inflation environment and historically low capital investment. If so, what are the implications for stocks and bonds? Conclusions. All government spending boosts GDP calculations, regardless of whether government spending is financed by tax collections or deficits financed by debt insurance. Isolating the interaction between increases in TDO and the dollar amount of GDP growth, the data show a regime change post-2008 compared to the period 1971 to 2007. In the period of 1971 to 2007, the dollar amount of GDP growth exceeded increases in TDO, except in years in which the economy was in recession. In the period of 2008 to 2017, annual increases in TDO regularly exceeded the dollar amount of GDP growth, which remarkably occurred during years that GDP was calculated to be growing. In the period of 2008 to 2017, the cumulative increases in TDO was a multiple of cumulative GDP growth. The dollar amount of GDP growth was completely dependent on deficit spending. The efficiency of each dollar of deficit spending is declining because the dollar amount of TDO is greater than the dollar amount of GDP growth. In the period of 2018 to 2021, the increase in TDO will continue to exceed GDP growth, per forecast made by the BEA and CBO. That is, GDP growth will be dependent on continued deficit spending. Importantly, if the economy slips into recession, it is possible TDO will grow at well over $2 trillion per year, meaning that the gap between TDO and GDP will get much larger.
So as the rates move up, then clearly the debt load is quite damning. So how do you see that playing into the various dynamics in the U.S.?
I'm glad you mentioned that. It's true, nobody talks about it. I mean, we just had a tax cut in the 9th year of an economic expansion that adds $1.5 trillion to the national debt over 10 years. I mean, that obviously that increases the cost on the debt. Then you had in the last cycle since 2007 $14 trillion of new debt added, public and private, and all you got was about a 4.5 trillion increase in GDP. That has to be worrying, and nobody talks about it. Out of this 47 trillion debt, 20% is rolled over every year. So you can make the calculation. If interest rates go up by 1%, debt servicing costs go up by 100 billion a year, and that's about the size of the benefit of the tax cut. So go figure. I think debt will become a lot more of a topic in the next few months.
And if there was ever one day in our future where world changes could and should begin, it would be March 26th of 2018.